Thank you for tuning into the Equity Channel, where we provide the highest quality stock market analysis to individual investors. Our goal is to help you improve your returns by keeping you up to date with everything you need to know. What helps investors beat the market is information and knowledge of how to use it. We'll provide you with both. Before we get started, be sure that you subscribe and turn on your notifications, because every time we drop a new episode, money is made. Continuing our dive into stocks that are potentially undervalued and could provide superior upside if this year's rally was to continue, we're going into the transportation and logistics industry. We're looking at JB Hunt, ticker symbol JBHT. JB Hunt is a leader in the trucking industry, but with trucking demand currently at or below pre-pandemic levels, the company has seen some downside in earnings. The key question here is, are we a bit too focused on the most recent downside and missing our opportunity to invest in JB Hunt's future? They have a strong brand reputation, a diversified service portfolio, and one of the largest fleets in the business. Like any other trucking company, they're vulnerable during economic downturns. With the trucking industry currently being impacted by a freight recession, volatile energy costs, and driver shortages, it's clear that demand for the company's shares are down. But are investors missing out on an opportunity? Over the past few years, JB Hunt has benefited from a rise in e-commerce, expansions in new markets, and also, as of late, a recent 3-year deal with Walmart to handle all of the retail giants' trucking and transportation. Let's look at some of the other fundamental factors that can impact the company's stock performance. This year's earnings are projected to see a further decline, but bounce back strongly next year with a projected 30.7% growth. Over the next 5 years, they're projected to grow earnings by 10.8% on average. JB Hunt scores a 16.7 on the Rule of 40, which is acceptable for a company in the industrial space, suggesting the company is operating efficiently despite industry challenges, but could still use some improvement. Their free cash flow margin was 10.2% in the most recent quarter, higher than their operating margin of 6.6%, showing the company has quality earnings and cash flows are currently abundant. This is also an improvement from what we've seen over the past 12 months. JB Hunt's return on invested capital is 12.7% and is below the average seen from other buy-rated companies in the Equity Channel's index, but well above what we look for in top-performing stocks. According to a report published by Morningstar Research on May 3rd, bullish investors say JB Hunt still has some competitive advantages and the ability to expand their market share even further. Bearish investors say intermodal demand is under pressure from depressed rates in the full truckload industry, and lackluster retail sector inventory restocking is a near-term headwind. According to Jefferson Research and Forward Equity Research, JB Hunt poses a low valuation risk to investor portfolios and ranks in the middle of the pack in terms of operating yield. After looking at the company's financial position, I would love to see some more cash on the balance sheet, but with interest coverage in the double digits, that's the extent of my complaints. To talk about what the stock is actually worth, I believe JB Hunt's value is closer to $180 per share. This suggests the company has about 13% upside from the current price. I think this price provides a great margin of safety, and I believe there is a chance the stock will exceed my targets in the long run. Investors who think about buying now should keep in mind that JB Hunt has earnings right around the corner. Potential risks within the industry include a worsening of the freight recession due to the eventual slowdown of the U.S. economy. From a technical perspective, JB Hunt has retraced 50% of their move from the 2020 low. A bad earnings report could see the stock decline further toward the golden zone, which sets the potential target of about $130 per share. While JB Hunt has been on a streak of missing earnings, I do believe investors should consider, in the long run, this current share price could still be considered a steal when it comes to investing in the trucking industry through JB Hunt. The Equity Channel is one of the most followed stock market podcasts for beginners. a valuable resource for investors who are looking for information on the stock market and the economy. We love to make our episodes quick, straight to the point, and rich in value. We hope that's what you got today. Be sure that you subscribe, turn on your notifications, because every time we drop a new episode, money is made.